Business moves at lightning speed, so you need access to real-time consumer data. Only Suzy offers an AI-powered research platform with quant and qual from their owned audience panel, so you can unlock actionable insights right now. Go to suzy.com/tearsheet to learn more. Today on the Tearsheet podcast.
It's really interesting to think about these products where you might not necessarily think of them as banking products, but they are all some sort of payment solution, right? The workflows that are associated with them and in some sort of money movement at the end of the day. And by Mercury already being in the flow of all the money movements by owning the bank account piece of it, it just was a very natural extension for us to actually move more so into the software layer of what we're actually providing. Outside of software, we're actually doing a lot of interesting things as well. If you think about how do we expand beyond the tech founder and startup persona into actually consumer banking, more so on the personal banking side as well.
Welcome to the Tearsheet podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. Today's episode features Dan Kang, VP of Finance at Mercury. He shares his insights on how the fintech company is reshaping corporate finance for tech founders. Kang has experience in private equity, Square, and now at Mercury, and this background gives him a unique view of financial services for startups and positions the neobank nicely as the IPO window opens wider for more of its clients. His insights are especially valuable in today's changing financial landscape. Dan discusses the company's recent expansion into personal banking. This move, based on customer demand, shows Mercury's commitment to complete financial solutions for founders. Kang emphasizes the importance of understanding customer pain points. This customer-centric approach has led Mercury to develop innovative products as well. These include free wire transfers and streamlined safe agreements. I think this approach sets them apart in the competitive fintech landscape. Dan Kang is my guest today on the Tearsheet podcast. Great. So who are you and what do you do?
Hey, Zach. First off, thank you for having me. I am Dan Kang. I am the VP of Finance over at Mercury, where I run our finance teams and also our credit underwriting teams.
Awesome. Well, welcome to the show, Dan. I don't know why, but I'm really enjoying speaking to chief financial officers, VP of Finance as of late. And it's an interesting thing for us because we haven't necessarily spoken to a lot of finance people. So I'm curious, as a finance person, why did you join Mercury?
Yeah, I've spent about a decade or so in fintech so far. I started off my career on the investing side in private equity, really focused on software companies. Went over to Square, when I joined prior to IPO. Was there about 4 years, seeing through the journey into public company life as well. And then was at a smaller consumer neobank company called Digit. So at that point, I had done 8 years of tours of duty within fintech. I was actually ready for something else. I think I've always been a bit mission oriented in terms of the companies I joined and so on. So thinking about like, hey, maybe ed tech is a thing for me, maybe healthcare tech and so on. And Imad Akun, our founder CEO, reached out on LinkedIn as he was looking for a VP of finance person. Fintech wasn't something that I was looking to do a third tour of duty on, but the vision that he had for Mercury was actually really, really fascinating to me, where as a finance lead, where in my prior company, I had to set up the whole operations from scratch, implement a bunch of different tools and just live through the pain of what it means to just like close the books before I could do any of the strategic work or before I could partner with the CEO on anything like more interesting. I just found it like very inefficient, and just in Mod's overall vision of like, how do we think about the bank account as a foundation and a platform to build a more modern finance stack on was something that was fascinating to me. And as someone who was effectively the end customer for what Mod was building through Mercury, it just seemed like a really great opportunity. So started join. It's been 2 years now. Joined as the first finance hire, built up the team from scratch, inherited the credit underwriting team. And it's just been a fascinating journey of where the business come and how far the products really come, of really realizing the vision of moving beyond just the bank account.
So that's an awesome story. I was checking in in my prep before our conversation today. Imad was on this podcast in 2020, which seems like forever ago. And so I know you've only been there 2 years, but how has Mercury changed as a company and as its product suite over that time period?
Yeah, Imad really started the company because of the big pain point of opening up a business bank account, particularly as a non-US founder. And it was pretty amazing how much product market fit he was able to find just
Right, I
through
remember
simple
that story,
things.
right? He had exited and he couldn't get a bank account in the US, something like that.
Yeah, it's
I
wild,
think
right?
it's one of
Like
the
he was a
Genesis story.
successful
Yeah.
entrepreneur, yeah,
Yeah.
and he was not able to open up a bank account, right? And just the process of opening up a business bank account, where I think the consumer banking side, I think has seen a lot more innovation over the past few years. There's obviously been a ton of different fintech companies that have gone and addressed that, but on the business banking side, it's harder. The set of requirements needed on that front are much higher as well. If you think about use cases like international wires and forex exchange and so on. So Imad really started off, how do we build a really, really great product on the banking services side for tech founders like himself? So very specific product set for a niche target segment that he wanted to go after, which obviously he himself was a part of as well. And from there, I think what he realized is that, hey, actually people are using this to really operate their businesses. And as a startup founder who gets started on Mercury, maybe he goes on to hire a finance team, starts integrating other tools, and the overall finance stack of what these companies are operating on become much more complex over time. It just made sense for us to start offering the different things that folks were looking to do with their bank account. And if you think about what that means more tangibly, it's, hey, how do I pay my employees? How do I pay my vendors? How do I get paid by customers? And do all of these things in a way that's efficient, doesn't require a company to stitch together 4 or 5 different point solutions to actually run and operate your business, right? So for us, if you fast forward to where we are today, we recently launched a suite of software products that are really focused on these finance workflows. So the first one that we launched is around bill payments. Essentially, how do you run your accounts payable operation, where a lot of our customers were essentially already doing this through the Mercury bank account, but just didn't have the workflows and approval processes that you would get from a third-party point solution. So we decided to build that in-house. It's really awesome to see some of the traction that we're already seeing on this front with customers. We have an invoicing product coming out towards the end of this summer, along with the employee reimbursement product. And it's really interesting to think about these products where you might not necessarily think of them as banking products, but they are all some sort of payment solution, right? The workflows that are associated with them, and in some sort of money movement at the end of the day. And by Mercury already being in the flow of all the money movements, by owning the bank account piece of it, it just was a very natural extension for us to actually move more so into the software layer of what we're actually providing. Outside of software, we're actually doing a lot of interesting things as well. If you think about how do we expand beyond the tech founder and startup persona into actually consumer banking, more so on the personal banking side as well. We recently launched about a month or so ago our personal banking product, where this is really born from founders who are using us for their businesses. Actually, really wanted to use Mercury on the personal side because they were just having a phenomenal experience. They were starting to realize that, hey, a banking product like doesn't have to be this really frustrating product that looks like it was built in the 80s for me to do really simple things like send out a wire and so on. So it's something that we launched and built. This won't be a broad-based consumer play the way that you see with other consumer fintechs, but we're really excited about the service area that this actually opens up for Mercury. And Mercury being able to be a great provider of not only finance tools for modern CFOs, but also like, hey, how do we actually just go make banking and let the core aspects of it a lot easier for consumers out there that kind of fall within our target segments as well.
Awesome. And so it's definitely a different Mercury than my first conversation with Imad. You've expanded into entire realms of fintech where they're standalone companies that are just focused just on that. And you've launching that as a ancillary, a complementary product to the core offering. Where as a company do you decide like you want to build something versus partnering or integrating through a third party solution? Like how do you make that decision internally as the money guy?
Yeah, it's a great question. We do consider this a lot about, build, partner, and also buy. I think we're in a pretty well capitalized position to consider acquisitions. I think for us, we kind of think about what is the core thing that we need to go deliver for customers, and what do we need to own? Own meaning build internally to actually deliver the best possible experience for our customers. I think for the most part, a lot of that has led us to continue to just build and extend. And a big part of that is because the banking service provides just such a great foundation and platform for us to go do that. Because again, we already own the money movement piece of it. It's where your cash is already sitting. So it becomes a really natural point for us to launch products like Bill Pay and so on, which are essentially, a payment and a money movement type of solution.
It's the home. It's probably the best home base other than maybe an accounting platform, right? Like it's a ledger.
Yeah, totally.
It's a ledger of sorts. So like if it makes total sense to, and I guess the more touch points you have in ancillary services, the better you can actually streamline the experience that and so that people aren't jumping through different apps, right?
Yeah, 100%. The ledger point and the accounting point is really interesting, actually. If you think about kind of like the stand of what's created when you're running an accounting and finance operation, right? There's a very tactical, like almost like physical part of, hey, this is my cash and my cash is moving. On the totally opposite end, all of that activity needs to be translated into some sort of data that gets transformed and ends up in your accounting as the language through which you could actually understand the health of your business and so on. The interesting thing about Mercury moving more so into the software product is that data doesn't just get created in a vacuum, right? Today, for a lot of accounting organizations, it's pieced together manually in Excel spreadsheets by accountants and so on. But a lot of that is actually transforming data or structuring data in a consistent format that you could translate into a journal entry, so you can upload it into QuickBooks or NetSuite or whatever your accounting ERP is, right? By us owning not just the cash movement, but also the workflows of it, we're owning the points of origination of how those transactional data are actually being created. And you can kind of imagine, by us owning more and more of this data, how much value that actually provides within our product suites and the types of opportunities that introduces for Mercury down the road when we think about how do we really, really automate the crap out of running a finance organization for companies.
You said something really interesting at the end, like as a VP of finance at Mercury, you're actually the customer as well. Do you get involved in product dev? It sounds like you're interested in it.
Yeah, I probably spend about 20% of my time providing feedback to the product teams, going through roadmap items with them. Every single Friday, we have this hour and a half session called Exec Product Review, where different PMs and engineers and designers will actually run their designs and specs in front of the entire exec team, actually. So it's not just something that's limited to, hey, like our VP of product or our CEO or so on. We actually really foster this environment of collaboration and input from various teams. And obviously, as the VP of finance and being an end consumer of these products, I spend a meaningful amount of time there. And also my accounting team and my finance team, they actually spend probably about 20% of the time as well, where they're constantly getting pinged like, hey, how do we think about this from an accountant's POV? What are the set of things that you care about? How would you think about prioritization and what you'd be looking for in a solution? So I always tell people I have like the best job within tech finance, I feel like, because you get to be not just the finance person, but also play a big role in product development as well.
That sounds awesome. And clearly I can just feel like you enjoy this kind of stuff, just listening to you talk and seeing the expressions on your face. So as you've moved further and further into software, I guess, how do you differentiate Mercury from some of the other players out there that have also sort of expanded horizontally?
Yeah, it's a good question. I think the beauty of being someone in a finance seat today is that you have a lot of options, but also options that enable you to consolidate what your finance tech stack looks like. At my prior job, this is only 6 years ago when I was at Digit, I had to implement a bill pay solution, a corporate card solution. We had an accounting solution. We probably had 6 or 7 different bank accounts and probably 3 or 4 other point solutions that we had to all stitch together. I was also using an outsourced bookkeeper initially. So just to be able to get to a month's view of what your financial performance was like, it took a really long time across a lot of different data sets. And at the end of that process, you never had like true great clarity of what that actually looked like. So the ability to actually consolidate down the tools provides a ton of value. But there are a lot of people who have a very similar viewpoint and value prop, but the actual starting point of what is the initial product that you build off of has a huge weight on what is your right to win when you think about selling into finance teams and so on, right? So if you start at one point solution, there might be certain point solutions that make a lot of logical sense for you to jump into. You see this in the spend management space, right? Where you start with the car product, you launch bill pay and so on. I think Mercury is in a really unique spot because by owning the bank account, again, you're owning the foundational platform upon which your finance, all of the finance operations actually go run at the end of the day, right? Like every single accounting transaction needs to reconcile.
It's like the bottom of the pyramid. Yeah,
exactly. Yeah. And I think the second competitive advantage that I think is probably less appreciated, and I don't know if necessarily Ahmad or the rest of the founders, planned for this with a ton of foresight, is that the bank account is the thing that you need probably day zero, along with getting your incorporation services set up so that you actually register your business. So you actually start the relationship with the customer from day zero, super early on, where you need a bank account before you could hire employees, before you can pay vendors, and so on. So expanding from there actually provides like a ton of right to win, especially if you have a product that customers love, right? Like that doesn't mean anything if customers begrudgingly are using your product, but the amount of love that Mercury actually hears from our customers and from founders and finance teams gives us a ton of just value in terms of our ability to do more and more for them over time.
I thought you guys were magnificent in how you navigated the SVB downfall. Just the messaging out to the world about, I think you guys went out and got 4x whatever, FDIC insurance that you had on the accounts initially. It felt very like, obviously good marketing, like here's an opportunity where, a big swath of potential customers are going to come from, but also like, wow, we care about you. We don't want this to happen to you guys. So here's what we're doing to like beef up our solution for you. Was that a source of, it seemed to be, at least from the messaging from the company, that was a source of a lot of growth for you guys during that time period?
Yeah, it definitely was. It was a very stressful time period.
Oh, of course, I can imagine.
That super happy what we were able to do for the community in that moment, where I think at Mercury, we generally have a culture of being very helpful. And that doesn't mean only internally, but also for our customers as well. I think that's a really big underpinning for our product, but also our marketing language as well, where I think it would have been really easy for us to try to capitalize on that situation. A lot of companies do this, right? Where, hey, look what's happening with SVB, come to Mercury, we're open for business, right? That was not the tone of messaging that we wanted to do as well at all. Like SVB was there for actually like Mercury in its very, very early days as well, which Mod has spoken about as well. And it's been a pillar for the tech community. For us, it was much more about, hey, people are freaking out there. How do we make sure that these folks find a good home for their actual finance operations? And how do we do this in a way where they truly do feel protected? Where I think in a situation like that, people are very fear driven, unsure about what decisions to actually go make. And you're also hearing opinions from 20 different people. You read something in the news, your VC investor might be telling you one thing, your peer that works in finance might be telling you another thing. And for Mercury to actually be able to kind of provide a home and a clear story of, hey, here is not necessarily just what we're telling you, but look at our products. Here are the decisions that we're making. Over a weekend of that SVB crisis, we were actually able to get our FDIC insurance up to 3 million, then 5 million by next week as well. We built a product over a weekend called Mercury Vault so people could understand exactly how much was being covered by FDIC insurance. We also had funds placed in treasury, right? That's protected from a bank failing. How do customers also think about the treasury mix playing into their overall protection as well? And again, just giving folks a sense of reassurance, not just by us telling them from a marketing perspective, but also through the product and actually just living it. And I think those two things really need to happen together, where it's not just about doing really, really great comms, which our team obviously did a fantastic job on, but also delivering a product experience where it does give that sense of security to customers.
Totally agree, and I could see that from the outside. You mentioned a few times, the company is very focused on doing good by your customers. How does that permeate the culture? How does that permeate the products? You gave a couple examples. I'm kind of curious if you could encapsulate that for us.
Yeah, it starts off with really understanding where the customer pain points and what are they looking for, right? There are some very seemingly basic things that we do in our product offering that were driven by some of these insights. So I'll take, if you think about our bank account, one of the things that we're proud of is that we don't charge a lot of ancillary fees, where if you've ever opened up a business account or a commercial banking account, I remember in my prior job, you get these client analysis.
Nickel and dimed, right? Nickel and dimed everywhere. Yeah.
Everything possible. You have no idea what these line items mean. Like it's $100. So do I really want to spend time like debating it? Maybe I should have, but it just becomes like this really tedious process that for us, one of the things that we did was like, hey, we're going to do free wires, where typically if you send a wire or even receive a wire from another financial institution, you typically get charged anywhere from $25 to $45 for that wire transaction, right? So that was something that we decided to do for free. And that was really driven by this insight from customers where you are receiving wired funds from VC investors when you're raising a round or so on, or maybe you are a internationally based founder with a US business and you need to send money out to another international sub, and having to get hit with the wire fee every time you want to fund the foreign sub was really, really annoying, right? So that was like a core insight. I mean, that was like a very simple use case, but that extends all the way into not just how we think about pricing, but also the product itself, where our safe product is a really great example of this, where safes are, somewhat of this like templated way for founders to raise early equity without having to determine the valuation and so on, right? It became really popular through YC. And it was one of the ways that companies on our platform were raising money. But, a lot of times that might require you to go work with outside counsel and so on. And for these bootstrap startups, they might not have the funds to actually do that. How do we make that process as seamless and easy as possible by providing templated legal docs and providing a really easy way for you to actually go request those funds, have them end up at Mercury. That's not a product that you'll see offered by any other bank out there, but it was really driven by understanding what does the customer journey really look like for folks on Mercury and building product towards that. So on the product side, I think it's really clear about how much time do we spend talking to customers, really understand their journey and so on. I think it all helps that we ourselves are within the startup ecosystem, right? So there's a bit of this like innate understanding of what that journey looks like. If I think about on the business side, though, it also shows up a lot where the way that we decide to price things, the way that we decide to bring things out to market also really need to make sense for our customers. I think if you really optimize for short-term revenue maximization, it might make sense in a quarter or in a year or so on. But if it doesn't really foster a deep customer relationship where the number one reason why they decide to stay with you is because they really enjoy the product, it's going to be hard for you to really see a ton of lifetime value from that customer over time. The moment that someone's able to price something cheaper than you are, or the moment that someone's able to deliver a product that is something like marginally better than you do. So I think for us, we spend a lot of time thinking through like, how do we balance building a really great stable business? And fortunately, we've been able to do that and we're profitable today, but also doing it in a way that feels right for customers. They don't feel nickel and dime the way that you mentioned, and pricing things in a way that actually makes sense for where they are in their own journey.
Where do you have those conversations? Obviously, 20% of your time and your team's time in terms of getting feedback from what your customers want. I think back to like Intuit, they had this famous apocryphal story, like the CEO used to follow customers home when they bought the CD in the Office Depot, watch them put it in and see the issues, like some creepy guy standing in the back watching how they're using the computer. But so you're in the ecosystem, you're eating your own dog food, you have a sense of what it needs, but like, are there other touch points where how are you speaking to customers to get that feedback, to be aligned and in tune with what it is that they want?
Yeah, I think it's twofold. The first is for products that have launched, understanding the data, where I think the customers can tell you one thing, but actually seeing how are they truly engaging with the product and so on says a lot as well. So if they tried a bill pay feature once, how many invoices are they sending? Is there a point where like that retention does drop off? Is there a specific point in the flow where they might drop off as well? When they do things, in a certain way, are they repeating those activities and behaviors, or like are they going around some other flow to actually get to the same end result? And all those things provide a lot of insight into how customers view the product experience step by step. The second piece of it is like data will only tell you so much. It's not helpful at all if you haven't launched a product yet and you're looking to figure out like, hey, what is the right thing to build and how to build it and so on. So we have a team of fantastic product managers that spend a lot of time with customers, both existing customers and potential future Mercury customers, hopefully, just understanding like, hey, what are your use cases? What are your pain points? What does your flow look like when you're looking at a solution? And like, what are the set of things that really matter and are value additive, right? When you talk about a bill pay solution, is it the approvals that really matter? Is it the accounting integrations that really matter? Is it having multiple payment methods available that really matters? And understanding like, how do we then prioritize a feature list and then build products for ways in the customer that really resonates with the way it fits into their day-to-day lives.
Got it. So can we talk a little bit, go into depth about those new products? We could start with the consumer account. That's, to me, that was fascinating because as a founder myself, I'm not a tech founder, but I have a small business that I'm running, and it's frustrating to have to use different companies because companies typically, or apps typically, do one thing. They do business or consumer, and it would make sense to me that a founder would want his own personal or her own personal bank account. Can you tell us a little bit about, I guess, where that idea came from and what the product is?
Yeah, definitely. The idea actually came, I would say, from our customers, where if you just go on Twitter and you look at some of the comments that we had about Mercury, even in the very early days, we had so many customers, again, who were using Mercury for their business accounts and wanted Mercury on their personal side. I think it,
and so they're posting that on X, like asking you for these things? Like, this is public?
Yeah, they're adding
That's awesome.
A mod of like, hey, like, what can I use this for my own personal account? Like, please. And it was actually like the most requested feature. You could call it a feature or a product for a really long time. So I think we've had this idea for quite a while now, like years, I would say. I think we were finally in a position where it made sense for us to make a little bit of this investment and a bet really at the beginning of 2023 when we hired a team to actually go focus on this. And it's been pretty amazing to see. And I think one thing to call out is that this isn't going to be a broad-based consumer play again, which I think I've mentioned. It's really
Mm-hmm.
focused on how do we go serve startup founders, which are obviously a big pillar of the tech ecosystem. If you think about what First Republic did really, really well, was that they made this segment of the market feel really special, right? They got cheaper mortgages, they got really nice fancy umbrellas, which I'm proud to own one myself. And it
And you can
became
see
this
people are
flywheel effect.
complaining that now that with First Republic gone, I guess part of Chase now, they're not getting into those perks. They're actually, I see them complaining on LinkedIn all the time. Past
Yeah,
clients.
absolutely.
Yeah.
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 I imagine Chase has a more fully featured bank account, just being like the biggest
Probably.
US bank, right? But
They're just
it's
not
that
getting the umbrellas.
experience.
Yeah.
Yeah, it's the umbrellas and then the customer service and just like
It's
the
not the bank
focus
account,
on
it's the
those customers.
umbrellas. Exactly. Yeah.
And maybe that's what Mercury needs to do as well, maybe more umbrellas. But I think for us, it's how do we think about building a similar flywheel effect that First Republic was able to do between their consumer banking and then also the business banking as well.
Mm-hmm.
So the way that we think about it is really, hey, can we get a bunch of founders who might start off on the business side, start using us on the personal banking side, and vice versa, where maybe someone hears about personal banking from a friend, they start off there, and when they start thinking about starting up their next business or their next venture, they actually decide to go bank with Mercury.
That makes a lot of sense. How about the bill pay product?
Yeah, the bill pay product is also something that customers have been asking for a while, where one of the biggest use cases of actually, your bank account is to pay people, right? A lot of times if you're a business, it's not P2P, it's really how do I pay like my software vendor, my lawyer, or whoever else you might be actually using. And it's a bit different from the consumer side where, you typically want to do this in a controlled fashion, right? You want to make sure they're the right approvals. So you're not paying some random Joe Schmo that your accountant is like looking to pay and so on. You also want these transactions to flow through your accounting software in a very specific way. And you want to be able to manage a ton of different invoices as efficiently as possible. And already
And
seeing,
approvals as well, right? There's might be hierarchy of who signs off on things.
yeah, absolutely.
Yeah.
So if I want to go spend money on billboard ads, I obviously want our VP of marketing to approve it. But if it's over a certain dollar threshold, you might actually, me as a VP of finance might also want to approve that as well. So having more of that oversight over the way the company is spending money is obviously a really important part of the control environment. So for us, it was really, hey, we're already helping facilitate the very last piece of that process. From finance terminology, we call it the procure to pay process, right? We're already handling the pay piece of it. How do we move further up that value chain so that we could help finance teams again consolidate down their workflows into as few number of tools as possible?
So it sounds like not only have you expanded laterally with new products, it also sounds like, and one of the things you said was like this is the first bank account a startup founder might have, but you're growing with your clients too, right? I mean, so you're moving up market with them. Does that require different culture, different bones inside the company to be able to service, a company with $50 million, $100 million of revenue versus, a company just getting off the ground?
Yeah, that's a great question. So we have seen a lot of companies who've gone on to raise, Series A, B, C, D. We even have a few public companies on
I was going
Mercury
to say, yeah, you're
which is
probably at that
fantastic
point,
to
and you're
see.
going to have more in the next 6 to 12 months, I bet. Yeah.
Yeah, hopefully. And we've also, through the SVB crisis, we were actually able to win customers who were much later stage over to Mercury. And I've seen a lot of those companies really flourish on our platform as well, which is awesome to see. I think for us, it's the product itself, actually, there is a different level of depth, particularly around controls and robustness that is expected, which I think was a really great area for us to double click into and build deeper on. So if you think about even just user permissioning, like user permissioning and access is kind of like the foundational layer of how you build a really great control environment. So how do we make sure that that's up to snuff for a public company that really cares about, hey, we need two-step approvals for any wires over X amount and so on, and being able to build to this level of complexity. I think internally it's really interesting from a product perspective where there is this balancing act of how do we build things in a way that's robust, feature deep for larger enterprisey customers, but do things in a way that's very simple so that if you're a tech startup founder that has no idea what accounts payable and accounts receivable means, that you just want to be able to pay people or get paid, how do we build a product experience that still works for them and scales down and everyone?
That sounds almost impossible because they're totally different requirements, totally different ethos to be able to service both. How do you do that in a single company?
It really comes down to what does the design experience come down to? I don't necessarily think it has to be a hard trade-off. I think if you could
Hmm.
actually build complexity in a way that feels elegant and a way that feels simple for people down below. I mean, like the technical guys there, you could do feature flags and all sorts of other stuff to surface the right set of tools at the right time. But I think a lot of it comes down to, from a design perspective, how do you present things in a way that's intuitive and simple as possible without having to sacrifice on the feature richness?
That's awesome. In the remaining time that we have, I want to just kind of ask about the modern CFO stack and how that's evolving. You're both a user and a producer of this. How do you see the needs and the options changing for a finance person these days versus where it was, 10 years ago, maybe earlier in your career?
Yeah. I think 10 years ago, probably not even 10 years, like 5 years ago,
Five,
I
right?
think,
Yeah,
yeah, finance people very much operated under the old adage, you never get fired for choosing IBM, or I forget
yeah,
what the exact thing is, right? And I think that's held true for a very long time, where if you think about who are the incumbents in this space across banking, across accounting, across, bill pay solutions,
right. There's
corporate
even a
cards, and so
second
on.
generation of incumbents that fill this role that you're describing. Not even the first generation. We're in the second generation. Yeah, that you won't get fired
Totally.
for using. Yeah.
Yeah, and the generation cycles I feel like are speeding up with technology
Hmm.
becoming faster as well. It'll be interesting to see what AI does to all of this as well. So for us, it's kind of really thinking about, how do we consolidate a bit more so and actually take a little bit, I wouldn't even say risk, but take a little bit more of an innovation forward thinking to what your finance stack actually looks like, where I think rather than being risk averse and saying, hey, this is what I used before, hence I'm going to implement it here as well, really thinking like, what is the core job to be done and what is the best solution out there that enables my team to be as efficient as possible and to do things in a way that's accurate and timely as well. And I think the benefit of consolidating tech stacks is not necessarily just having fewer vendors. Actually, if you think about accounting, a big part of it is like just a data problem, right? Where you get data from multiple sources, you need to transform it, has to be in a consistent format, ends up in manual journal entries and a fair amount of automation into your accounting ERP at the end of the day. By having fewer sources of accounting transaction data being created, you can actually do these things in a way that's much more structured and formatted. And having clean data is, kind of a big backbone of how do you then leverage things around AI and so on in the future as well. So I'm pretty excited about Mercury being a player within this field of like, how do we actually enable more of this environment where it's not just about consolidation, but it's also about being able to provide you a really solid foundation on the data platform side so that your accounting teams can actually spend less time transforming data into a format that makes sense for your accounting software and more time on how do you interpret it, how do you make use of it.
I appreciate that because I know when we speak to big banks and incumbents in your seat, they talk about wrangling data. They're not even about transforming data. It's like even the wrangling's the hard part. Um, but I have to feel like we fintech 1.0 was about like unbundling, right? And so you got point solutions that did all these things really well. We're definitely in a period now of rebundling, and I love how you
Mm-hmm.
guys have added in features which are entire standalone companies, and in a way that's really elegant. I guess what's to stop the market from wanting to unbundle at a certain point again? I that's just like today's innovators become tomorrow's incumbents. So like I guess
Mm-hmm.
maybe it's too early even to talk about this conversation, but like how do you ensure that you're there along for your customers' ride essentially?
Yeah. If you think about what's the real driver of bundling and unbundling, is that the incumbents at some point become stale, non-innovative, and they just don't keep up with the way that a finance team
Right,
operates
exactly.
today, right? So
Yeah,
it's less so about how do we stay relevant through the cycles. I think it's much more a
that's a
question of
good
how do we
point.
continue to serve customer needs well. And I think if you do that piece really, really well, I think independent of cycles, you'll always find a customer base that really loves your product.
Yeah, I love that answer. That was perfect. Um, as you look forward over the next 6 months to 2 years, like we can end with this question: like, what are some of your biggest goals and priorities running the finance part of the organization as you are expanding, as you're growing, launching new products, getting larger type customers? Like, how has your job evolved, and what are you focused on over the next little while?
Yeah, I think in the VP of finance, the biggest thing is making sure we are allocating resources properly. So there's something Imad and I partner on really closely, where, the financing is kind of unique, where we're not building the product, we're not selling the product or supporting it or so on, right? But one of the things that we're uniquely positioned to do is having a good understanding of what are all the different investments we've made across the company. And we have a lot going on right now, as kind of probably comes through across product, go to market as well in terms of different target segments that we want to go address as well. So how do we make sure we're placing the right amount of bets within the right time frame across all of these things? It's a pretty decent coordination effort and a pretty decent amount of work to set the right goals and hold different PMs accountable to them as well. So that's probably the biggest focus around 6 months to 12 months out as we really think about pushing forward across product and on the growth side.
And how is that stretching you individually as a professional? And how's that stretching you?
Yeah, the fun thing about Mercury is that when you launch more products into more customer segments, the surface area grows dramatically, right? It's a very different challenge and problem versus thinking about, hey, I am selling business banking into tech founders. So the more surface area there is, I think the job just gets way more interesting. There are a lot more interesting questions to go answer. A good example of this is, in the early days of Mercury, and still today, actually, a lot of our new customer acquisitions were organic, where people heard about it, they saw, emotes, tweets, or whatever it might be. And today we have a ton of different growth levers across performance marketing and running Google and LinkedIn ads. We have brand marketing, doing events, billboards, all sorts of stuff. And we also have a sales team that we built out with, SDRs and we have to find a way to actually pull a common thread across all of these now. Whilst before we could just focus on building a great product and having a lot of product-like growth. Now it's how do we really think about building out a go-to-market motion that spans everything from acquiring a tech founder, which can feel a little bit more like a consumer because you are acquiring an individual at the end of the day, versus having a sales motion with longer sales cycles and so on, where you are selling into a CFO and someone that's much more of a sophisticated buyer and being able to do everything in between, where these are also not single touch sales, but it might take you 3 months where someone might hear about you through a billboard, they see you at an event, they get reached out by an SDR, and then they're eventually, signing up through a BD person. How do we think about attribution? How do we think about ROI across all these different touch points and making sure we're investing in the right place at the right time? Just builds a much more fascinating set of problems for someone to finance to go address.
Dan, this has been a fantastic conversation. Really appreciate you joining us today. Thanks for joining us on the Tearsheet podcast.
Yeah, thank you for having me. It was a lot of fun.